So something very interesting happened here today in the markets. For one, the market staged a massive reversal in the last hour of trading today. At the same time, Fed Jerome Powell did an interview after hours and said some very interesting things. So we need to talk about exactly what was said. Futures market is open. Nasdaq futures are down about 0.12%, S&P down 0.17%, and the Dow is down about 0.18%. But I think this could actually be some positive news. Before we get into it, hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Let me know your take on this situation. Potentially, could this be a bullish thing? Now, look at young Powell right there. Young Powell. He says he cannot guarantee a soft landing as the Fed looks to control inflation. There was a couple other things he said as well. He said whether we can execute a soft landing or not may depend on factors that we don't control. So it's pretty interesting seeing that. It's one of those things where I think the markets sold off last Fed meeting after that initial 3% rally. Remember, the next day was down like 4% in the S&P. A lot of that, I think, had to do with the Fed just saying, you know, everything's great, don't worry about it, basically acting too confident, really like ignoring some of the issues that that people are talking about, and also taking off 70 basis points off the table. Definitely help to fuel some of the sell-off. Now, it also says Powell repeats 50 basis point hikes at next two meetings seems appropriate. And I think that's it. It says Fed Powell, the process of getting inflation down to the Fed's 2% will include some pain. Well, Unusual Whale said, well, at least it's been said now. And that's exactly the point. The Fed is acknowledging this. Now, what the markets have already done, you got to keep this in mind, because first glance, it might sound pretty bad, the Fed actually coming out and saying that. But the markets have already been very bad. The QQQ year to date was down about 29% at one point today, still down about 27.5% to close out the day. So the markets are already firmly expecting a very hard landing. And it's pretty clear to see when you go ahead and look at fintech. That's why fintech is actually so important here, to look at kind of what people expect for the overall economy, for the consumer, for tech stocks in general. Fintech, financial technologies. That's what fintech stands for. And you can see Square, PayPal, Sofi, any fintech has gotten really, really destroyed. Well, fintech's higher growth, but at the same time, these stocks getting destroyed like this in such a fast amount, or short amount of time, I should say, is telling you that people expect a lot of weakness in the consumer. And this right here, this chart and the PayPal chart, they're firmly pricing in a hard landing and a recession for 2022, and likely a global recession at that. So when the Fed comes out and basically acknowledges the bad news and actually has something to say about it, more times than not, it's going to be seen as a positive thing, even if the overall situation is negative. And basically, the best way to look at this is Fed Jerome Powell acknowledged bad news that was already much worse, right? It's already worse than what Powell acknowledged. At least he acknowledged that it's bad. Hopefully that makes some sense. If you're a bit confused, don't worry. It all comes down to market pricing, and we'll see exactly if the markets do take it as good news tomorrow. But the markets definitely staged a massive reversal towards the end of the day today, so it's looking pretty damn good. The futures are coming back up just a little bit. Nasdaq only down about 0.09% as of right now. Now, I do want to talk about what is going to happen tomorrow, because we do have some economic data, call it that comes out tomorrow, which is going to be import prices month over month, export prices month over month, and those come out at 7:30 in the morning tomorrow. At 9 a.m., you have Michigan consumer sentiment. Those tend to be pretty damn important for the markets, because those surveys, the sentiment, that really kind of gives you a gauge, or at least Wall Street likes to look at it like this. It gives you a gauge into how the consumers are behaving or expecting to behave over the next, call it 6 to 12 months. If these sentiment surveys are good, then hey, the consumer might be better than we thought, and that could be a very bullish thing. I don't really expect it to be like a huge market moving catalyst, but then again, you can be surprised by some of these Michigan consumer sentiment surveys. Now, at the same time, you have Fed Kashkari speaking tomorrow at 10 a.m. in the morning, and we'll see if we see a little bit of a pivot or a tone that tries to slow down this market sell-off. It's no surprise the Fed wanted the markets to fall, right, to help with inflation, asset prices, one would call a bubble, but not 27.5% or almost 30% as of earlier today in the first 5 months of the year. That's just too fast, and it will destroy the economy more than anything else the Fed is going to do, right? It really hurts a lot, especially being it's a midterm year this year. If the stock market is down 27.5% heading into voting time, you think it's gonna, mess with people's outlook on who they want to vote for? Of course. So it's in the government's interest, it's in the Fed's interest, because the Fed kind of caters towards whatever party is in power. After all, if you guys think I'm lying to you or something, Trump pressured Powell to stop tapering in 2018. And that's what finally gave us this bottom and kind of this V-shaped recovery. Not as quick as COVID, but it was still very, very fast of a recovery. Within about 2 weeks, we had gotten ourselves out of a pretty deep hole because Trump pressured Powell to stop tapering. So the Fed is not a part of the government, but it does cater to whatever, political power that is in power. So that's that. I do overall think that we have hit a bottom, guys. The fear and greed index is at 6 out of 100. It's like almost as pessimistic as you can get. 1 week ago, extreme fear of 17. Yesterday was 8. Today we closed at 6. And you can see market momentum, extreme fear, terrible. Stock price strength, just terrible. Net new 52-week highs and lows on the New York Stock Exchange. There's nothing hitting a new 52-week high right now. It's really, really bad out there. Stock price breadth, and you can see it's literally been straight down, meaning that most stocks are declining on a daily basis. Like on average over the last call it last 2 weeks, about 60 to 70% of stocks are going down substantially from there, possibly more as well. This chart's kind of an interesting one. Put to call options, that's extreme fear. All of these are at their highest levels they have been at, besides the VIX, which kind of shows you people are not panicking too much, and they're not really running into puts on the S&P 500. I will say I think a lot of people are holding a lot of cash right now, so I think this is really one of those indicators where the VIX can spike a lot more when there's something unexpected that happens, like COVID. The VIX went crazy. Nobody expected that. They all rushed into puts, right? Because after all, the VIX monitors the puts and calls on the S&P 500. The higher the VIX, the more puts that are being placed on the S&P 500. Well, why would you place puts on the S&P 500? Generally speaking, options are insurance. So that's why it's called premium, what you pay for them. Why are you going to insure a portfolio that is mostly cash? If you're talking about big money here, not the retail investor, but big money, typically they're not going to go out and try to play these intraday moves with millions of dollars in puts if they have most of their portfolio in cash. A lot of people are holding a lot of cash right now, and I think that could make for a decent sized recovery when that inevitably does happen. And then you do have safe haven demand, difference in 20-day stock and bond returns, and also at the lowest levels it's been in a year. So all of these are at their worst levels in the past year. Extreme pessimism, as well as the short interest, like I was going over in the other video on the S&P 500, is 17.3%. On the QQQs, it's 14%. These are the highest levels that we have seen in a very long time. So I think overall we are due for a bounce. The fact that Fed Jerome Powell did come out and acknowledge this could be seen as a bullish thing, and that's what I am going to be paying attention to coming tomorrow. And I think if Friday is positive, if we do have people buying stocks on a Friday, willing to hold them over the weekend, I do think that is a solid sign of a reversal. You can also see earlier in the day, we did hold support at 385. That was the level that we wanted to watch for. That was really, you know, if we didn't hold up there, then you're likely going down to 360. That would have inevitably been the bottom at 360. So I mean, there's not too much to go, believe it or not. If we do not find a bottom here, potentially just another, you know, $10, another 10 points on the S&P, but we did find support and did recover pretty decently here towards the end of the day, from 385 all the way up to 390 to 60. Now let's switch gears and let's talk about SoFi stock and exactly what is going on here, because SoFi was again positive even when the markets were selling off quite dramatically. A lot of quote-unquote retail stocks, or just in general, a lot of the stocks that have been beaten into the ground, started to actually catch a bid and see a pretty strong day overall. You could see Square was up 6.37%, 1.24% here in after hours. PayPal was actually down on the day, which I found very interesting, but up 0.63% in after hours. SoFi up 3.10% to close the day, and up 2.12% here in after hours. I could go on and on and on, even with stocks in my specific portfolio that were up a lot today, even when the markets were down as much as 2% on the Nasdaq at one point before that reversal actually did happen. So what is going on, and why is that actually a sign of a bottom as well? Well, it comes down to the simple fact of we've been waiting for Apple to actually come down in a substantial way. Apple, Microsoft, those guys have been really holding up the markets, and when you see people start to actually sell out of Apple, or at least not put new money to work in Apple, they start to put money to work in the stocks that have been beaten down the hardest. So it's like this big game of ping pong across the stock market in different sectors, and some of your quote-unquote retail stocks definitely got the puck today and did catch a bit of a bid, and I think that is a solid sign of potentially seeing a bottom. Now if we can get Apple and we can get everything to rally back maybe tomorrow, that's going to be your solid indication of at least a short-term bottom, at least until we get the next round of earnings that come out here in about the next 2 to 2.5 months. So there's a while until we get fresh new earnings, and I think that potentially is when we could fall in a more dramatic way. But nonetheless, I think a lot of pain is obviously already priced into the stock market. Now, SoFi stock did close at $5.66 per share. You want to watch that $5 level for support. We did find support around $5 the last 3 days, briefly coming under this to $4.82 the day that SoFi leaked earnings. I don't know, it's weird whenever that happens. I don't know if you call it a leak or if it was an accident, what happened, or if it was on purpose. But earnings that came out midday, the stock got destroyed, got halted for 3 hours, came under 5. By the end of the day, it had actually recovered a lot of that loss all the way back up to about 580, and then came down a little bit by the end of the day. And then the next following 2 days have been pretty damn good, and we have gained about 7.6% here in the last 2 days. So that's pretty good. If we can stage an overall market reversal coming tomorrow, heading into the weekend, that's going to be a very bullish sign for sentiment, because a lot of people don't like to hold over the weekend, and stocks like SoFi should continue to perform very, very well. But we will see. Obviously not a guarantee there, but if we do see a massive reversal, you want to watch $8.03 per share. That is the level that we have found a lot of resistance at in the past, ever since we did slip from 25 all the way down to 4. That's the level we've tried to retake about 3 times now, and we're not able to, and that's sitting at $8.03 per share, like I said, and that's going to be really the most important level in my personal opinion. If we can break out above that, then $10 per share would be our next stop. But I think before we even talk about $8 per share or anything else, we need to really get some kind of fundamental good news. We need to really see inflation coming down, the war in Ukraine ending, the China lockdowns ending. Literally anything at this point could cause a massive bounce in the markets, because we have had virtually no good news. Like there has been no good news for months now. And if you really think about it, it's kind of crazy, the streak of bad news that we are on right now. Now, the short interest of free float for SoFi stock is sitting at almost 21%. Current shares that are sold short of 152.43 million. Cost of our max of about 15%. The share utilization is at 100%, and days to cover is sitting at 4. So primed for a short squeeze eventually when that reversal does come. As far as the option activity, 9 orders totaling $1.27 million, positive order value of 9%. So you are seeing a lot of those puts that are heading onto the options. And look at the dollar amounts here: 3.52 million, 3.51 million, 5.67 million, 5.7 million, 4.8 million, 3 million, 109,000, 2.96 million, 35,000. Those are all puts. About 3 million, again, more puts. So some very unusual option activity to the put side has been going on today, and I think that's why SoFi stock was not up as much as something like a Square. You typically don't see this kind of put activity on SoFi stock. Unfortunately, it does not say if they are selling these puts, but I don't think that's the case, because a lot of them are the $15 puts for May and July expirations. So that is pretty much going to wrap up this video. We don't have any more insider buying to actually report to you guys, but still, I do want to remind you guys that that was a very good sign, as they did start to buy a lot of stock that I don't want people to really forget about here, because it was only back in March, and there's a lot of reasons why people sell stock. There could be hundreds of reasons why people would sell stock, but only one reason why people actually buy stock, and that is because they think it is going to go higher. So that is going to be all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.